Okay, I'm very excited to be talking with Rich Checkan, who is the president of Asset Strategies International. Today we're going to be talking about something that Rich is a real expert in, which is, of course, my namesake, the commodity of gold. Now, Rich, people talk about it all the time. There are a million different ways of owning it, but the bottom line is, why should someone invest in gold?
That's a great question. It's often misunderstood. The main reason that we sell gold, the main reason we feel people ought to own gold is as wealth insurance. You have insurance on your home, your car, your health. What do you have for your portfolio to protect it in bad times? And, for us, gold is a store of purchasing power in a liquid form for a potential financial crisis you hope you never have.
Okay, so say that again, because I want to ask you a question about each one of those.
Gold is a store of purchasing power in a liquid form for a potential financial crisis you hope you never have.
Okay, so let's start with the first one. It's a store of purchasing power. That implies, based on what you're saying, that it actually somehow keeps you ahead of inflation. Is that really true?
It is really true. And, if you look at the performance of gold versus the dollar, because that's how we tend to measure it worldwide, it's a commodity. You look at gold's rise in value versus the dollar's demise in purchasing power over the years. I think since the creation of the Fed, the dollar's purchasing power has dropped about 96, 97%, depending who you talk to. Gold's actually, it looks like it's appreciated if you look at a chart, but what's really happening is the measuring stick, the dollar, has gotten smaller. So it takes more of those dollars to buy an ounce of gold.
So if we're thinking, and as I'm remembering back when gold was a higher price in the past, all along there's been inflation. So explain it to me again. In other words, if the price of gold isn't actually going up on a regular basis the way inflation is going up, how is it that the decrease in the value of the dollar really matters to us?
Well, the dollar's purchasing power has weakened over time, and I believe that's due to mismanagement. You go back centuries, you look at any empire and the currencies they had, eventually they get to the point where interests get in the way of probably good fiscal decisions, and they make decisions where they spend more than they have. That lessens the value of each dollar or each euro or whatever it is in your pocket. So the dollar is losing purchasing power over time. If you look at a chart of gold and the dollar since the Fed was created, it's very clear right about the time we came off the gold standard, that's when gold was unshackled and it shot up or appreciated in dollar terms. And it's really because we lost fiscal responsibility. We lost that governor on our decisions. And the dollar has lost purchasing power from that point forward. It's pretty dramatic if you look at the charts.
All right, so let's look at the next point that you made, is you said that gold was a rather liquid investment. Now, I know you're not talking about melting it down and actually moving around with liquid gold, but I assume what that means.
You could do that, but I don't recommend it.
Yeah, that would be a hot day, right? But what I assume you mean is it's something that you can take a bar of gold or a couple of coins and you can go somewhere and do something with it because it's actually a valuable currency that people are willing to work with. I have to tell you, that's not my experience. What do you mean by it? It's a liquid kind of investment?
You can find a market for it to buy and sell anywhere in the world. Plain and simple.
Anywhere in the world, okay.
Yeah, it's basically wealth that can move across borders. It's not subject to government controls, et cetera, for the most part. Anywhere you go, somebody will recognize the value of what you're holding in your hand, and you'll be able to exchange it for the local currency, your goods and services, et cetera. That's what we mean by liquidity. Now, there are more or less liquid forms of gold, clearly. Depending on what your purpose of the gold is, would dictate how you would own it, where you might store it, these things.
We're speaking with Rich Checkan, who's the president of Asset Strategies International. He's been in the gold business for decades. He's been talking to us, about why buy gold, explaining how it can be a protection against inflation. Next question was, how liquid is it? And Rich, one of the things you brought up is it's something that you can literally go across the planet and people know what gold is all about. So let me share with you my story and tell me what I've done wrong.
Okay.
Recently, we were going through my parents' stuff and like everyone, you found a gold chain here or a trinket there that looked kind of gold-like. And we thought, okay, this is pretty good. We filled a box, but it was a small envelope, and said, let's go to a dealer who can sell gold. So this was complicated. It wasn't liquid as when someone gives you $100 and you can move it from here to there. Dealing with this was complex. So now we have to go to a store, and the guy says, looks at it, he goes, well, that's not gold, and that's not gold. And so as a consumer, I don't really know what gold is. And then at the end of the day, he goes, all right, I'll give you $125. What do I know, right? I have no idea what this stuff was worth, and it's frustrating, so I took my money and I took my $125 and gave him the trinkets. So I have no idea. So that does not feel liquid to me. Now, maybe I had a bad experience and it works better for other people, but what are you referring to?
Well, one way of owning gold is through jewelry. Many folks around the world feel that they don't trust governments, they don't trust banks, and they rather wear their wealth, if you will. That's a great way of storing purchasing power. And in those markets where that's common, it's fairly liquid to do so. In more modern economies, I could tell you that the most liquid form of ownership is going to be government-issued coins or bars minted by major refineries. If you go to a jeweler, a precious metals dealer, even a pawn shop, most anywhere around the world, they're going to recognize the value and they'll give you good value. Now, you do want to make sure that you know what you have before you go in there. With jewelry, it's hard because sometimes it's, 24 karat, 22 karat, 14 karat. You have to kind of know what you have going in to know that you're getting fair value compared to the gold price. Within a pure gold coin, a pure gold bar, it's clear. Whatever the gold price is, that's what it is.
Let's go into this clear thing, because as a guy on the street who wants to maybe own some gold, I have no idea what the purity really is. I don't know what the markup is going to be. You go to a pawn shop and he says, oh, I got a beautiful gold coin minted by the U.S. government. And he says, okay, I'll give you X% below the price per ounce or however it works. I don't really know what I'm dealing with. How do I get past that so it actually becomes a useful currency?
The first thing is know who you're working with. I would recommend working with a dealer that actually looks out for their clients that want long-term relationships, not a one-off trade. I don't want to disparage the whole industry, but let's face it, pawn shops is probably not where you're going to get your top dollar for a gold coin or a gold bar. If you go to a reputable precious metals dealer, someone like ourselves, you will get treated fairly. You'll get good value for your metal. I could tell you many gold coins issued by government mints are actually selling at above the spot price, and that's what they'll pay you because that's what it's worth.
Why is it worth more than spot? Is that just because it's artwork? You're saying the coin is worth more because it's beautiful or something?
No, there is some value to the minted form. The fact that it is liquid and recognizable is got some value to the dealer. They'll actually put a couple % above that when they sell it to someone. So, they make their living on the spreads, but they're going to be fair, both to whoever they're selling it to and whoever they're buying it from. And that only happens when somebody cares about you and therefore the long-term relationship and a long-term business model.
Mm-hmm. Okay. So let's go to the next point you made, which I thought was also very interesting, was that gold is something that could be used in a time of a crisis. When I imagine a crisis, and maybe I'm a bit of a doomsdayer sometimes, is, I imagine there's going to be some war and currency systems aren't going to work and the internet's going to go down. And, here I am with a bunch of gold coins. Are you imagining that I would go to the local market and, flip a coin to the guy and he'll give me a chicken? Is that really what you mean by a crisis?
Not necessarily, although I will tell you that's happened. If you look throughout history, there's countless people that escaped, for instance, Nazi Germany with British sovereigns sewn in the hem of their clothes. That's how they were able to transport their wealth across borders and start anew elsewhere. When my uncle and his partner started in this business in the 70s, they worked with the Vietnam refugees coming from South Vietnam, and those folks that had gold were able to start a new life in a new place. So it could be that, but reality, I don't see us bartering for a loaf of bread with a gold coin.
All right.
If you have a financial crisis, if you have a medical emergency, you can cash it in, you could take care of what's on the table, and then go back and replenish your emergency stash, if you will.
So the crisis that you're referring to presumably is something more like when the stock market crashes, people rush to gold?
Absolutely. A lot of times you'll see that. Gold will sell off. It did when, say, AIG and Bear Stearns collapsed because people had to meet margin calls. One of the most liquid investments in their portfolio was gold. They sold it, met the margin calls, and then started replenishing and building up. It was one of the first markets to recover.
All right. Hey, Rich, I have a whole string of other questions for you, but I see we are just about out of time. So tell me in the last few seconds, how can people learn more about you and follow your work?
It's very simple. If you're stateside in the U.S., toll-free number, 1-800-831-0007. You can get us anywhere worldwide on the internet at www.assetstrategies.com.
Okay, we'll put a link to that at the show notes of today's show. Rich Checkan, thanks so much for taking the time.
Wonderful to be here. Thanks, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.